Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're going to be doing a mortgage rate update as of 6/3/2022, and then Wells Fargo fires a bunch of people because they misuse appraisal waivers. I'll go in depth exactly what appraisal waivers are in a little bit, but let's get on with the mortgage rate update. And it's just, real estate market is doing shit. The seller's market now is not doing too hot. The buyer's market is completely trashed up. But let's go ahead and take a look at these mortgage rates, and then we'll go ahead and discuss the Wells Fargo thing, and then the state of real estate as itself. So we're going to be pricing out 5 different mortgage products. We'll be pricing out a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. And if you don't know what a 5/1 adjustable rate mortgage is by now, it is fixed interest only for 5 years, then adjust every single year according to the rate and the cap on your product. So 30-year fixed will be sitting at 5.44%. That is 0.01% increase from 1 day ago, 0.19% increase from 1 week ago, 0.1% better pricing than 1 month ago, and 2.31% increase from 1 year ago. 15-year fix will be sitting at 4.79%. That is no change from 1 day ago, 0.07% increase in pricing from 1 week ago, 0.09% better pricing than 1 month ago, and 2.25% increase from 1 year ago. 30-year FHA will be sitting at 4.83%. That is 0.01% increase from 1 day ago, 0.19% increase from 1 week ago, 0.17% better pricing than 1 month ago, and 2.18% increase from 1 year ago. 30-year jumbo will be sitting at 4.71%. That is 0.01% increase from 1 day ago, 0.1% increase from 1 week ago, 0.01% increase from 1 month ago, and 1.59% increase from 1 year ago. 30-year 5/1 adjustable rate mortgage will be sitting at 4.58%. That is 0.03% increase from 1 day ago, 0.15% increase from 1 week ago, 0.04% better pricing than 1 month ago, and 2.33% increase in pricing from 1 year ago. So Wells Fargo, man, is just doing it all over again. It just seems like they're always just like in deep shit and hot water with something other than another. So they misuse something that's called an appraisal waiver. So to let you understand exactly what an appraisal waiver is whenever we're heavily in a refinance market. In a refinance market, what we do is when we, as a mortgage broker, as I originate loans, I go ahead and provide a lot of them, and for up to 50% commission rebate, 0% listing, and any mortgage assistance, link in the description below. But as far as appraisal waivers go, so what we do is when we originate loans, let's say for instance you want to go ahead and do 2 cases, right? We'll do a rate and term, or we'll do a cash out refinance. A rate and term just means the rate and term, you're not taking anything out of it, you just want a better rate and you want to go from there. And let's say you are teetering on the lines of, like, let's say 70% loan to value, whatever the threshold is, to get something that's called an appraisal waiver. An appraisal waiver means that you have so much equity inside of the house that we don't need to go ahead and do any appraisal on it. We don't have to do anything, so we could just go ahead and waive it all the way around. Now this is a big misstep when it comes to the Wells Fargo thing, and I'll explain to you in a second just why. So what we do is when we go ahead and originate the loan, we'll go ahead and we'll pre-populate everything. We'll put the address, we'll put your income, we'll do all of that good stuff, right? We'll go run your credit, and then we'll see whether we get a DU or LP approval. That's whether Fannie Mae or Freddie Mac, and who's going to go ahead and buy the loan, whichever the wholesaler is. So you go ahead, and there's a category over there that's going to put the appraised value of the home. Now, if you are teetering on a threshold to go ahead and get an appraisal waiver or not, you could kind of manipulate if you are underwriting the loan itself. And majority of depository institutions like Wells Fargo, Bank of America, JP Morgan Chase, they have their own underwriting team. They'll go ahead and underwrite the loans themselves, and then they'll go ahead and just make sure it falls under the guidelines and whatever overlays that they have. An overlay is, okay, if Freddie Mac or Fannie Mae or FHA or VA has their guidelines, they're going to go ahead and put an extra amount of an extra layer of added things that they're going to go and require on their guidelines to go ahead and mitigate risk for a little bit. So they went ahead, and let's say you're teetering on that appraisal waiver, what they'll do is they'll go ahead and adjust the home value on their 1003 on their computer system or whatever operating system that they use. They will say, okay, instead of the house being worth, let's say hypothetically $600,000, it's actually worth $675,000. So that increases the total loan to value that you have, which then will give you ultimately an appraisal waiver. That's why you ever see those ads, and including myself, get your appraisal waived. Don't worry about any closing costs or whatever it is that you can. Appraisal waivers means that you just have so much equity in the house, and we go ahead and waive it, which gives us, it makes things a lot easier, because then we get a quicker close date, clear to close. Everybody in the mortgaging world knows that a CTC is like the biggest thing. Once you get a CTC, we don't have to worry about it. And then especially because in the last 2 years, we've had such a pain in the ass when it came to appraisals. Appraisals were just holding up loans, sometimes even prolonging it, where people had to go ahead and pay extra because they had to go ahead and put a rush on that product. Well, Wells Fargo, since they underwrite their own loans, what they do is, on our end, okay, as a mortgage broker, what we do is we go ahead and send that loan out to whatever wholesaler, and then we have 3 teams that go ahead and make sure that the value of that property is exactly what we stated. So they'll do their own comp system, right? They have their own program that'll go ahead and say, okay, this house is worth X amount of dollars, and then they'll go to another system that they have, and this house is worth X amount of dollars, to go ahead and confirm what we go ahead and do. Well, I guess they just weren't doing it, because this is a very simple thing to go ahead and calculate. You could go ahead, you can't manipulate the numbers that much to go ahead and get yourself an appraisal, unless you're doing it by 10, 15,000, then you could kind of justify it, because I mean, it just is what it is. Some programs are off by 10, 15,000, give or take, but some of them, they were going 100,000 above or below. So to get themselves an appraisal waiver, then you could go ahead and close that file really, really quickly. They could get it done and over with, and then just push it out, just worry about underwriting, and then get that clear to close, get you the title and escrow, and get it all dialed in and out of the way. And I guess what they weren't doing their due diligence and trying to get that thing, you know, completely thing. So who's it really at fault? Let me know in the comments below. Who do you think is really at fault? I personally think that it is the drop of the ball on Wells Fargo's part, their underwriting team, and everything that is associated with their whole entire system. But that's where they're at. Wells Fargo, you're in a little bit of trouble once again, and that sucks. But they're doing a lot of firing. Now that goes along the lines of majority of mortgaging companies right now. Aside from this appraisal fiasco, we're kind of in a shitty situation. This thing sucks. The total buying power of majority of buyers has decreased by 50%. Majority of the people that we were able to pre-qualify a year ago and have them completely pre-approved has changed dramatically. Majority of the people aren't approved anymore. Interest rates have gone up so much that it's just becoming unattainable for some people, because the home prices have still yet to go ahead and match the total interest rate. But are we playing a catch-up? I think that's what we're just doing. We are just playing a catch-up. Everything that we have going on right now, because the home values right now, so what happens is when interest rates increase, it takes some time, especially in a low inventory situation, for inventory to start increasing, because now homes are going to be sitting on the market a little bit longer because of the affordability part of it. And then once we get into a little bit more of an area where home price or interest rates and people aren't being able to buy it, we're gonna have to start adjusting the total amount that we're selling the homes for, because it just isn't coming off the market. It's homes previously that were selling for, you know, in the course of like 2 weeks max. I had a house that we sold in less than 24 hours of having it listed. We didn't even have any showings. It just got purchased right out the gate. So that's not happening anymore. So, well, if you like the content, please consider liking, subscribing, commenting, all that other good stuff for up to 50% commission rebate, 0% listing on selling your current home, or any mortgage assistance. Link in the description below. But it's a little secret, okay? I personally, okay, because I'm trying to give you the best financial advice when it comes to real estate market and purchasing, kind of waited out maybe 6 months. I know I offer these things, and we're the only company that I know of that actually offers what we do. Just chill out. It's not a big deal. Don't try to be so rushed into trying to buy something, especially it's something that you're going to be in for God knows how long. Whether it's a starter home or it's something that you want to go ahead and retire in, or whatever it is, the fact is this is a big financial burden that you're about to go ahead and take on. So just you can chill out. This is just, and don't take my advice, do your own due diligence. I'm just speculating, to be honest with you. This is all speculative, but it just seems like I'm just doing 1 + 1 here. Like right now, 1 + 1 equals like a peanut butter and jelly sandwich. Nothing makes sense. But in my world, if me trying to be logical about things, it just seems like we're playing catch up right now. So once the new numbers come in the next, few months, in the next quarter, then we'll kind of know exactly where we're at and kind of like project it to where we're going. But if Freddie Mac, Fannie Mae, majority of big banks are saying exactly what I'm saying, I mean, we can't all be just completely delusional, right? Or maybe I am. Maybe I'm stupid. I don't know. Let me know. Till next video, guys. I really appreciate you watching. Peace.